So today, what is happening in European venture? Let's have a look. Today you've got Mads and myself. We are looking at some figures from Deal Room. Are UK-based VCs back on track? We're looking at climate large companies maybe stepping in, stepping out of COP29 and climate stuff. What happened from the UK International Investment Summit? There's some interesting shenanigans there. Andy Haldane from the FT has very interestingly taken a different look at public investment in the UK and how that can be eventually self-financing. What's happening with Reeves and the National Wealth Fund and where that's come from. What else we got? The EU Inc petition. I'm sure most people have seen this, but just have a little dig into that. SpaceX. How can we not talk about SpaceX catching Starship rocket booster? And finally, we've got this lack of exits challenge for LPs. Are they still looking at VC and what the data points are there? So that's what we've got, Mads. We are starting at the top. So first on the list is, according to Deal Room, UK-based VCs are on track to raise more than 12 billion this year, which is actually surpassing 2021's record of 11.5 billion. However, according to Venture Capital Journal, you and I talked about these different data sets and the stats and where these numbers come from, which I think is an interesting point in itself. But just to stay on this point, according to Venture Capital Journal, global VC fundraising still hasn't surpassed 2019 levels. So this year so far has seen a peak, but fewer and larger funds. No surprise there. So LPs are possibly doubling down on the big brand names. Average fund size has nearly doubled in the last 6 years. It's now at $170 million for the average fund size. The top three fundraisers this year aren't massively well-known names. So we've got Norwest, Arch, and Flagship Pioneering, all raising around $3 billion. Do you know those three funds, Mads?
They're not real venture funds, are they? I thought they were sort of more growthy PE type funds. I mean, Arch, I think, is a sort of climate growth tech kind of infrastructure project finance. So it's not the venture capital as you and I know it. It's not, finding a couple of founders in a garage and backing them with $1 million. It's, I think it's much more about sort of putting mega bucks into stuff that's already, big.
So these are the biggies, and they just happen to be doing a bit of VC. Fine. So Pantera Blockchain, they oversubscribed at 2 times their original request, raising 1.3 billion, which surprised me. I thought blockchain had fallen out of favor. That's obviously still cooking. And funds that are still open and looking to raise a combined $240 billion globally. Now half of that is in North America and 25 billion is still open across Europe. But what's going on here? Any reflections, Mads, on this very mixed picture of what's happening with fundraising?
Managers are out raising money. I mean, what we know is that many firms that raised in 2020, 21, 22 are looking to raise new funds now, and many will not be able to because they made bad investments. They invested in things at silly prices, thought that it would always be up and to the right. And others that took a different approach and actually backed smart founders and were building real companies are going to have an easier time raising. And then, as you're saying, there are the big brand names which are trading on kind of very long track records and a good history, and they're also able to raise. So yeah, it's a tale of depending on what you bring to the party, you either will or will not be able to raise. I think maybe except for 21, 22, it was probably always like that. I don't know if there's really any new news here. It sort of feels like that's just the way things are. But maybe you could see something that's new and different in this to what we would expect.
The main thing that came out for me was that I was surprised at how well the UK is doing. Now, we were talking before we hit record about the stats and the numbers and the differentials between, which data set you look at. But it does feel quite warming. And we do know, and we've known for a number of years, that Europe is growing much faster than the States. Obviously, the States is still the behemoth, but Europe is growing, I think last stats were around 4 times faster than the US. But it's quite warming to know that we're looking to raise in the UK alone, not across Europe, but 12 billion this year. That I found extremely surprising and very, very warming. So we know full well from our experience that there's so much talent across Europe. that these very talented founders need access to these funds. And that I thought was amazing. And obviously,
And we've covered some of it here, right? We've covered Atomico, we've covered Bolton, we've covered some of those, UK races earlier in the year. We know that our good man Stebbings has just succeeded closing 400 million. It's a fantastic achievement. Again, UK-based firm. So yeah, I mean, we kind of think we know who these firms are, and they're fantastic firms, and it's great to see them, as you say, succeed.
Talking about warming, I want to talk about cooling. So the next point was something that I wanted to discuss, which was I was reading recently about the largest companies in the world seem to be cooling on their activity on climate change. And it feels like just as we're looking at this massive push now for electricity and energy generation and lots of big tech going into nuclear and Microsoft looking to open up new plants and Google, and they're basically becoming their own energy suppliers. But many CEOs are not attending COP29 this year. And a lot of the big financiers like BlackRock, Bank of America, Deutsche, many of these large internationals are not basically engaging on the climate change dialogue. Now, as a proxy, growth in MSCI's. Now, MSCI is an analyst toolkit, so they provide a lot of the tooling for big business to look at their ESG and climate tracking. Now, they've seen a massive drop off in their growth rate for selling their services and selling their toolkits. So they're now back to 2017 levels. Whichever vendor you look at, there seems to be a drop off in big companies looking at how they deal with their tracking their climate and their ESG commitments. Investment in climate tech in 2024 looks like there's a 20% drop there. Climate tech investment looked to peak in 2021 at around $55 billion. And that's been growing steadily from about $5 billion since 2014. So there's been this great push into climate tech, which is now obviously petering off, and big tech is now not as interested in tracking and supporting this. So as we look at this against the backdrop of the age of electricity, as the IEA have declared, and obviously much of that is being pushed by EVs and AI and data centers. So have we reached peak climate tech? Is big business no longer interested? Is this a big deal, do you think? What's going on here?
Do you know what I think what it is we've reached peak virtue signaling, and I think that's probably a good thing. We've seen announcements that Microsoft is going to invest in 3 Mile Island, getting that back up and running on the nuclear power side. We've seen, as you just mentioned, that Google is going to go nuclear and invest in these smaller reactors. I think you're going to see lots of investment in all the good things that can help with the energy transition. We know that the cost of solar has kept coming down, down, down. Everybody's expecting that there will be changes to planning laws in the UK that will make it easier to get permits for things like onshore wind. Again, that will help. We'll keep to see great advances in battery storage and in energy storage technology. So I think in all the things that really matter, we will keep seeing lots of changes. But perhaps some of this virtue signaling we've seen over the last 10, 15 years is going to be pulled back a bit. And that's probably a good thing. So we can get back to business and talk about what is it actually we need to do, as opposed to, just be a talk shop and sort of try to look good. So I must say, I'm not too despondent.
You're not so bad out of shape. I mean, if you look at, the new data centers that are being built, we've got 24 gigawatts coming online. Now that's triple the same period last year and exceeds already the entirety of 2023, according to a new report from Wood Mackenzie. So there's a whole world of stuff going into energy. But I also do know that we're now at a stage where renewables is mostly at a lower cost against fossil fuels. So hopefully the fact that people aren't buying the platforms to measure this stuff, hopefully that doesn't matter so much, and maybe the virtue signaling is baked into that. Let us see.
Yeah, no, exactly. I think that's exactly right. And hopefully some of this push to get more energy online, because we need it to not fall behind in AI, means that there will be a real political will to say, okay, let's make it easier to put solar farms up. Let's make it easier to put wind power up. Let's make it easier to do all the things we need to do to actually deliver sustainable energy instead of just talking about it. Yeah. So maybe it's the optimist in me, but I'm seeing so many positive things. Yeah, bingo. Yeah, there you go.
Right, the UK International Investment Summit, which was on Monday. Now, Labour have very proudly announced that they're bringing in 63 billion in private sector investment. However, there was a little bit of a challenge with DP World, who is P&O's operator, who shelved their 1 billion investment into their container port in Essex, wasn't it? Yeah. So they were looking to do a £1 billion investment into this container port, and they have, it looks like, pulled out, but maybe not. Maybe there's a little bit of posturing here. But this was just before the investment summit, where Starmer and obviously Reeves were looking at what they're going to be doing, and it feels like the word of the day is stability as far as Starmer is concerned. And I can understand that he's trying to instill, after however many chancellors and however many regime changes in UK government over the last 10 years, a bit of stability is to be welcome. And they're also talking about less regulation. He was pushing this less regulation mantra, just as he was talking about pushing more regulation into the employment regulation side. So Reeves did suggest a change to how debt would be measured in government, which means that we can get more investment into infrastructure, which would be an incredibly good thing, unlocking potentially tens of billions of pounds, and therefore bringing in more foreign co-investment, which is a great thing. And the 8 sectors that were mentioned on Monday were defence, digital technologies, financial, life sciences, and professional and business services, which seems to cover a full multitude of goodness there. So it feels a bit weird that this was before the budget. Obviously, the budget isn't coming up in a couple of weeks, so maybe there was a little bit of restrictions about what they could and couldn't say. But have you got any reflections on this?
Yeah, I mean, the reflection I would start with is maybe just from a slightly different angle, which is the thing that made, I think, many people a little bit nervous about Labour. Because if you have been looking at what Starmer and Rachel Reeves have been saying, it's all been, look, we're going to go for growth. We're going to try and get rid of the things that stand in the way of growth. It's, we can't spend our way and just by just by spending more on public services. We can't kind of wish our way to a better economy. We actually have to invest, and we have to let the economy and business invest, and we're going to try and do the things that will help us get there. But Starmer, he's also lumbered with a Labour Party that's, right now is very big. There are hundreds of members, and many of whom are not, should we say, naturally inclined to favor business or maybe even understand how business works. And what can make us a little bit nervous
is... Is that a diplomatic version?
Possibly. You have somebody like Louise Hay. It's just not obvious that she really understands, how important business is. And yes, even, with the best will in the world, if you are a Labour politician that want to invest more in healthcare and education and, schools and all these things we all want to spend money on, the wealth is going to come from somewhere. We can't all just be public, civil servants and just serve each other. There's going to be some businesses that actually create some value that can then be taxed and that the government can spend. And if you sort of pick battles, or if you say to international investors that you're terrible people because you want to make a profit, well, they can probably invest somewhere else, and that's not going to be very good, even if you're sort of more on the left side of Labour. And there's actually quite a lot of people in the party that have those leanings, and I think Starmer is doing his best to control them. I think he's picked some real battles with the left of Labour, and so far he's been good at keeping them in line. But this was just one of those examples that I think many of us have been a little nervous for. Is can he keep them in line? And I think we'll know a lot more, as you say, when the budget comes up on the 30th. Is it going to be a proper growth budget, or is it just going to be kind of more borrowing and more spending and not really investing in the future?
Yeah.
And yeah,
it was Louise Haig that basically said that the DP World, the P&O operator, was a rogue operator, right? So they fired 800 staff and then rehired cheap agency workers. But that seems to be an example of what you're talking about, where
but it was more than that. She said that people should start boycotting the company.
Yeah.
And for a minister in the government to say that a company that invests in the UK should be boycotted, I mean, that's the kind of stuff you can say if you are out of the political organizer in opposition. But you cannot say that if you're in a government trying to attract investment into the country. It was really, really stupid. Yeah. And so of course, there's always a little bit of a stupid quotient, right? I mean, the previous government was not exactly blooper free, but you can only take so much. And I think right now the government is a little bit on trial, and we're all kind of seeing, can they actually manage the economy without messing it up? And this was not a good sign.
No,
It
I
looked,
just think that Starmer was distancing himself from those comments quite actively.
yes, yes.
I want to talk about Andy Haldane. So he wrote this really interesting piece in the FT. Now he's a contributor to the FT. He's not a proper full writer there, but he's the former CEO of RSA and he's the ex chief economist at the Bank of England. And he's got a really interesting take on public sector investment. So leaning into what we were talking about, he's essentially saying that the UK government can invest more and it can be self-sustaining, which is the backstory there being that public investment is due to drop from 2.7% to 1.7% over the next 5 years if Labour doesn't change this fiscal rule on debt, meaning obvious stuff, less activity, lower tax receipts, less output, vicious cycle stuff. Now, the OBR has suggested that a 1% of GDP increase in public investment will boost output by 0.5% after 5 years, 2% after 10 to 15 years, and if 4% of GDP, it could raise national income by 10%. Now, this is big stuff, so effectively meaning a 9% ROI, which would exceed borrowing costs. Now, this feels like big and bold stuff, which goes beyond 4-year political cycles. So is this the tightrope that you're talking about with Reeves? I mean, how can she do this without scaring the city? Can she make this happen?
I absolutely think she can, if she has a credible plan and if it's well thought through and well costed. And so Labour was quite quick this summer to enter into some salary agreements with public sector workers. Some of them were necessary, but I worry a little bit that they probably didn't ask, the government probably didn't ask enough in terms of needs to increase productivity in exchange, right? So it's fair to say, look, you are behind on pay, we're going to give you an increase, but we're going to expect to see productivity increases to make up for that. And there wasn't probably not quite enough quid pro quo there, so it wasn't maybe as business focused, as economical as it should have been. But if you look at the noises coming out of the city today, to your question, just today Goldman Sachs was out saying, well, actually, we're buyers of US gilts. And they have, together with many other international investors, said, look, we think that UK interest rates could come down compared to where they are now. So this is not going out and borrowing another 60 billion pounds a year to invest, but could you do 10, 20 billion pounds more? You probably could. And so hearing that from a lot of the international bond investors, I think, is really reassuring. What they're expecting is that the money doesn't get squandered away, but invested in the real stuff we need. So energy transition, transport, the stuff that we know will make the economy and the country richer over time.
Well, the 8 sectors they were talking about actually do make sense. There's nothing in there that's nonsense. They're talking about key, technology, energy, all of the stuff that we talk about incessantly. So it feels very aligned.
Yeah, absolutely. And I'd say probably not all of those. Some of those sectors are probably sectors where the government should look to attract international investors to come and invest and set up things and do things, as opposed to for the government to invest directly. And other places are places where the government can invest in nuclear power generation or in new infrastructure for transportation. I mean, those are great things, or at least co-invest together with private investors. So, yeah, I agree with you.
It's the co-invest piece that excites me. If we can bring in some private stuff, we saw the Australian pension fund. I've forgotten the name of it. Last week we were talking about them. They want to do it. They want the backing of some kind of government, being alongside them. But they're willing to come in, which I think would only be a great thing. Now, staying on the investment side in the UK, Rachel Reeves, they've cut the National Wealth Fund by £1.5 billion, despite this UK investment drive. Now, it was originally only 7.3 billion. Now it's been cut to 5.8 billion. And this National Wealth Fund is the rebrand of the UK Infrastructure Bank. And the idea being that if they can invest tens of billions of pounds into decarbonising the British economy, so into all these infrastructure projects, then we're onto something good. However, if GDP in the UK is around 2.3 trillion, is 7.3 billion even anywhere near gonna scratch the surface of what we need to achieve? So it feels like, to me, this is actually at 5.8 or 7.3. This isn't enough. What do you think?
Well, the numbers we've talked about is we probably need about 1% of GDP of additional investment. So that would be your 23 billion. I think Labour, they were talking about 22 billion under the campaign. And they've now been cutting back and cutting back and cutting back. And the current number is about 1/4 of a percentage point of GDP as opposed to 1 percentage point. And is that enough to move the needle? Not really.
No.
And we're going to have to see how they're going to make the numbers up. They've talked about creating another 40 billion pounds of fiscal headroom. through a combination of tax rises and departmental cuts. Whacking a lot of tax is not going to be great either, because you're going to take economy out of the system. You're potentially going to scare off other investors. So it's a real balancing act that she's got to do right now, Reeves.
But it does feel like, going back to the Andy Haldane piece, it does feel like investment is the answer. And we've banged on about this for, forever and ever and ever. It does feel like whatever happens, we need to find a way to invest. And that's, across the board. And if we,
as we spoke about last week, it's not enough just to spend money. They've got to fix planning as well. Otherwise, you just get a string of HS2 projects with massive cost overruns.
But they know this. I mean, I remember Starmer saying, explicitly, we're going to get rid of these kind of, whatever you're saying, 4,000 records that you will need or planning applications to do a thing. So they know this stuff. What happens, who knows? But it feels like, they're saying these words explicitly. So I'm hoping that this will all come to pass. I want to move further afield. I want to move into Europe. So one of your points this week, and this is a really, really interesting one, it was an article discussing whether the European project is under threat, whether the EU is under threat. So I've written, America is divided, China is divided, and the EU is pulling itself apart, was my commentary on this when I saw you writing this. So Mario Draghi's wake-up call to combat feeble productivity growth has ruffled some feathers as core members are showing signs of protectionism. And Spain is now looking to do deals with China, and many, many European countries are looking to do trade deals outside of the bloc. I saw a couple of videos online about Macron, and he was very, very compelling, talking about how if we don't come together, work out this regulation piece and focus on this productivity piece, we are in the Sturm. And to quote him, he says, "I really believe we are at risk. In the 2 to 3 years to come, if we follow our classic agenda, we will be out of the market, I have no doubt." And that's Macron. Now, is this reversible, or are we on the road to death knell of the European project, do you think?
It's been predicted many times before. People will remember the Greek sovereign debt crisis, where people thought the Europe might be torn apart. And actually, that led to a series of reforms that I think in many ways strengthened the role of the ECB and strengthened the European economy.
We were in a much better financial situation there. This feels like everything is financially driven. Everything, I mean, if you look at how much political division there is and how much financial insecurity there is, when the Greeks went through that, we weren't in such a disastrous place, I would argue.
It was post a great financial crisis. There was still a lot of overhang there. I'll take this somewhere else. I think the real threat is what's happening with the European economy because of the transition to EVs and what's happening with especially the German automotive industry. The German automotive industry has been a powerhouse of the European economy because not only is it a phenomenal export a dynamo, but it's also a part of the economy that has an incredible supply chain. Germany buys products from all over Europe, and the world buys cars from Germany. And I think I read somewhere that the German manufacturers have built more than 40 manufacturing plants across China. So we're not talking about little sort of assembly shops. We're talking about sort of full-scale plants. And what's happening now is that demand is just dropping off a cliff because the Chinese market wants EVs. The Germans were slow to take EVs seriously. The cars were not of high enough quality. And BYD's just come in and been scooping up a lot of share.
Well, and isn't China doing, I think 50% of new car sales are now all EVs. And I think in the States, like 10% or something. It's like nothing. It's
nuts. And of course, they would like to enter the European market next. And so we can put up protectionist trade barriers, and we might think that's great. We're protecting ourselves for now. But the German export engine is what has been driving the European economy. So if anything, I think that is the real threat, that export engine no longer works. And we got to think quickly.
Aren't the Germans shutting plants?
They've been shutting plants. That's exactly right.
Yeah. Oh, this isn't good news. So what? So I get that, the news cycle loves doom and gloom and, all that aside, how much reality do you think there is in the EU really struggling? Or is this a wake-up call where Draghi's commentary is going to come to pass and this will be, a real punch in the guts to actually get some stuff moving and the EU back on track, in line with productivity, realign, proper activity? Or is this just like news cycle chip paper?
For sure, action is needed. And I also think, we talk about doom and gloom, and it can often be difficult to see a way out of a crisis. But should we write everything off? I absolutely don't think so. It's interesting to see how much things can change when people have their back against the wall or when they want to take really ambitious steps and moves. One thing I sometimes think about is, yes, of course, China right now is the example, right? 10 years ago, we said, the Chinese will never be able to manufacture a car that's competitive globally. And guess what? The European Space Agency said, SpaceX will never be able to challenge us in launching satellites because they've not even sent a rocket up that works yet. And guess what? They have, 95% of the market today. So things can move quickly when the right decisions are taken. And hopefully German industry and European industry will make some of the right decisions.
So it feels like, it's proper startup mode, isn't it? When your back's against the walls, magic happens. So let's
Founder mode.
Founder mode, baby. The EU's in founder mode. Macron and Draghi leading the charge. So staying with the EU. So the EU Inc Petition is out. Now, most people will have seen this. My question for us is, will it happen? Will it find some teeth? In 5 weeks' time, the EU is coming together and they're going to hopefully look at this petition, which is from Andreas Klinger from Prototype Cap and a few other people. And it's a request that the EU creates a pan-European startup entity. So it's effectively to enable investing and the startup ecosystem to be able to go cross-territory much more easily. Fixed investments, Europe-wide employment, stock options, unite the European startup ecosystem. So not more regulation, but kind of a standardization, like the Delaware passport kind of approach. So the ask really is to sign the petition. If you haven't signed the petition, have a look at, do a search for EU Inc Petition, EU and then INC Petition, and you'll find it. But what do you make of this, Mads? Will this happen? Is this something that can happen, and will it happen?
So there is the saying that you should never let a crisis go to waste. And you can hope that the powers that be are looking at the economic landscape, saying the German economy has not grown for 5 years. It's nuts. You got to do something.
Yeah.
Do I think that this idea is going to be the thing to transform the European economy? Probably not. Yeah. But I think it's a super interesting step, and we got to try some stuff, right? We got to, as you say, go into founder mode. We got to experiment. We got to move quickly. It's not what governments are known for, but then again, you shouldn't let a good crisis go to waste.
Well, it feels quite timely, right? It feels like as everything is turning to poop, this is maybe one thing that can start in a library of other things that can hopefully make a difference.
Yeah, agreed.
You mentioned SpaceX. Now they have just, obviously, again, everyone will have seen this all over the social web. They've managed to catch a Starship rocket booster, a massive. I don't know how many tons of equipment this is, but it looked super cool. Now I'm a bit of a cynic about this kind of stuff, and I was just like, this is very technically impressive, but what does it really matter? I get that this means that we can get more rockets to go up, but so what? I mean, why does this matter?
It matters because it's cool. It matters because human ingenuity and challenging ourselves to surpass what we could do yesterday and go beyond the frontiers of our previous, powers and our previous capabilities is important. That's who we are, right? And some people are happy, kind of want things to just roll on and be the way they've always been, and would be happier if we could roll the world back to the way it was 1,000 years ago.
Make America great again. Turn it back. Turn the clocks back.
Well, do you know what? I'm not like that, right? I think progress is important for the sake of progress. That's who we are as humanity. We got to reach for the stars. We got to get out there, and nobody embodies that more than Elon Musk and the engineering organization he's built. The space economy is becoming more important, and this has got real monetary benefits. Removing the landing gear can strip several metric tons of weight off the rocket, and that means you can put that more into more cargo on, or you can put more fuel on, which means either longer range or that you can send more stuff up at a lower cost. And so there's a cost saving. It also potentially makes the rocket more resilient, because you don't have the impact on landing. It could lead to faster turnaround time. So again, there's real hard ROI to this. So it's super impressive, and it's probably a really good business case too. So in my book, it's tick, tick, tick.
Listen, I know I'm being a misery, but let me just play the counter for a second. I mean, I remember when all of the big tech guys were starting to throw rockets up into space, and then I looked at it, okay, this is mining rights. This is how can we go and capture asteroids, and I'm assuming there'll be some kind of moon base that will be part of this processing plant. And I get all that, and I get that we need all of these materials for all of these things, all these promises that we're making on Earth. But does this mean that we're not focusing on climate change? Does it mean that we're not focusing on the very things that are going on down here? And I'm up for the excitement and the technical revolution, but I'm also scared that we're not paying enough attention of the stuff and living within the means of what we have, and paying attention to how we look after the Earth that we do have. I don't believe that, for example, that we can live on Mars. I don't believe that we can be an interplanetary species. So I don't know how we square that, and I don't know what. I guess to your point, let's just get amongst it and see. And all of this, revolutionary stuff is exciting, but I can't help but think this is a bit of a sideshow and a bit of a distraction.
Yeah. So climate change is incredibly important. I think it's we're going to solve it. We're going to have more energy than we'll know what to do with. And satellites can potentially be part of the problem, a part of the solution. We've seen that orbital mirrors are being discussed as a incredible new technology that we are going to look at. And there are companies that have been raising money here over the last year to invest in developing exactly those capabilities. What can orbital mirrors help us do? Well, as we know, one of the challenges we have with solar PV is that, some of us, we live here in the cold north, right, where there's less sun. But if we can put some big mirrors up in space that can direct sunlight to us, that means we can generate energy outside of the normal daylight hours, a bigger capacity that we would otherwise be able to. It means we can concentrate it more, so we don't need as much space being taken up by solar PV arrays. So, I mean, that's just an example of how all of this stuff in my head can come together. If we look at the innovation we've had in solar over the last 20 years, the cost curve is unbelievable.
Yeah.
Nobody thought it would go this fast. And if we extrapolate that another decade, we're going to solve the energy crisis. Between renewables and nuclear, it's going to be a solved problem. Will there be residual areas? Of course. I mean, we often talk about airlines. It's hard to make big planes fly on solar yet. But if we have enough energy, we can convert other energy sources into liquid hydrocarbons, biofuels, and we can fly on those. In my head, all of this stuff is stuff we can solve. I'm really not worried about it. It worries me when I see, we're talking a lot about pollution, like companies letting chemicals or effluent into the nature and not being held to account. And there is talk now about criminal prosecution for the people responsible, because that's important. But I think the overall, are we going to be able to generate energy on planet Earth without hydrocarbons? I think that is, absolutely, 25, 30 years from now, we will not have this reliance on oil and gas. We will have found ways to replace those sources. I have no doubt.
I'm sure you're right. I think you're right. I think the if nothing else, the whole SpaceX piece can just be something that makes us smile. At the very least, something that makes us smile in what is normally a pretty shitty news cycle. So last up we have venture capital, lack of exits. It's restricting new deal activity according to PitchBook. So a bit of backstory. So US VCs invested $37.5 billion via 2,800 deals last quarter, which is 34% down on the quarter before. Insider and bridge rounds are keeping the numbers up, as well as AI is keeping the lights on a little bit. Active investor numbers have dropped by 25% across the pond, back to 2019 levels. Now, we don't know if they're hibernating or zombie, but maybe this is no bad thing. Are we having a bit of a clear out? Are some of the tourists still leaving? Is this a good or a bad thing, do you think?
We need liquidity. There's no doubt. And there is liquidity, but not enough in the industry as a whole. And we know that so many of the LPs that we work with and that we know and that we talk to are saying, look, I love venture and would like to allocate, but I need the existing investments I've made to return capital. And that, by the way, goes for all private capital, right? Also kind of the buyouts, the private equity groups. So it's a general problem. I'd say some of it is structural, right? So there are not enough tech exits. Some of the growth funds, some of the bigger funds have been providing much more secondary for founders than they did in the past. So there's a lower incentive for founders to go public, because if you can get secondaries and get liquidity that way, and that catches other investors out a little bit. And I think that's something that will have to solve itself and sort itself out culturally, because that doesn't work longer term. You're killing the market. But then we also know that there are some more time-bound things. Lina Khan, she's had a kind of a crusade against big tech M&A that meant fewer trade sales. And we've had fewer active public fund managers now than we did 15, 20 years ago. So there are fewer funds that can underwrite an IPO. So these are some structural things. And I think some of these will sort themselves out. We're going to have an election in less than a month in the US. And I think the new administration, no matter who it is, will be more favorable to tech M&A, because everybody can see that the current policy just isn't working. And then we're also seeing that we have higher interest rates now. And that means that's making it harder to clear some of the valuations from 2022. But we're going to get a mean reversion there. Interest rates are going to come down, especially if trade policy isn't too wacky. And I think the odds are that Trump probably will win the next election.
You think so?
I think so, yeah. I think so. I'd give it at least 60%.
No, I'm the other way around. I think they're going to do the right thing. I think Americans are going to do the right thing.
It's not corroborated by the polls as far as I can see. But, okay, who knows, right?
I think I've noticed there are so many more Republican polls coming out. I've never seen that before. I've seen all the nationals, and I've noticed I'm seeing so many more reports reporting, when you scratch the surface a bit, they're Republican polls. I'm like, okay, fine, you're backing your own pony. I get it.
Yeah, a butcher selling meat sort of thing. But I would say the thing that worries a little bit about Trump is that some of the policy proposals he's made around trade are just a bit wacky. Lots of tariffs will push up prices.
Wacky? No.
Right. And so lots of tariffs will just mean prices go up. That'll mean more inflation. That'll mean rates can't come down. But, assuming that it doesn't get too wacky, we should see rates continuing their downward ascent. We've already had 0.5% this year, and there'll likely be more coming and more in 2025. And as rates come down, it'll make it easier to both underwrite IPOs and also underwrite trade M&A. So I think the combination of those two things just means that in the next 12 to 24 months, we will see a mean reversion. There will be more liquidity, and that'll help sort of unblock the system. So again, it's not a great position right now here in this quarter of this year. But again, I'm not too pessimistic. I think we're going to see this turn around.
Yeah, cycles, I guess. I mean, we just baked in a little bit of inertia, aren't we? But the cycle will reverse.
Yes.
Awesome. Thank you so much, my dear man. That is it for this week, and we will catch you next week.
It's a wrap. All right. Love you, brother.